From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 23rd, 2018. Today we're going to take a look at the USDJPY, the US dollar versus the Japanese yen. Starting here on the daily time frame, we can see that the currency pair has been in a downtrend for quite a long time. The blue trend line shows that we have been falling from all the way up here into the 113s towards 114 level, all the way down into the mid 105s. Over the past week or so, we found some support down here, 105.50, and have seen a little bit of a rebound, a little bit of a push back up. So the question will remain for the day today until some new information arises. Are we looking for the market to turn back down in the long-term trend that we've seen here, the downtrend, or are we looking for support and for the market to go back up and maybe even turn the trend around here for the US yen? So we don't know which one of those is going to happen, but we do know where the market is currently finding support. 106.70, 106.40 is the area of support. That's the pink shaded area down at the very bottom of the chart. Yesterday came to a screeching halt and stopped right there at 106.70. And today, so far, is holding above there. So we know where the market is finding support. So the first thing that we would say about the pink zone today is that you probably don't want to go short right on top of that pink shaded area. It's finding support there. The only real reasons you would go selling in the direction of the longer term trend is that it breaks through that pink shade area, gets underneath it, 106.70.40, to go lower down to the yellow zone, or it rallies back to resistance, which happens to be all the way up here at the orange zone in the blue trend line, back into the mid 107. So if you're a seller thinking about going short on the dollar yen, you either need to rally back to resistance or break through the current area of support. If you're not selling it at the current time and you're waiting for another opportunity to go short, and maybe there's an opportunity on the intraday basis for a long shot here. 106.70.40 is holding as support today, and so there may be an opportunity for you to look for a bounce. Remember, each one of these colored zones represents an area where the market has historically made trading decisions to buy, sell, enter, and exit. We call them generally support and resistance, but that's the price, that's what's happening in these areas. The market's buying and selling, entering and exiting. And so if the market has done that before at this pink zone, and there's further evidence of it back in history, and we'll look at it during the trade room today, but 106.70.40 is one of those trading decision zones. So that becomes an area where we would make a trading decision. Zoom it in. So we look for one of two things. It either breaks through to go down to the yellow zone or bounce off to go back up to the orange zone for our time frame. So as we get down here, we can see what's happening here at 106.70. Markets just continued to bounce here. Yesterday, the fall ran into this area. You can see even back here where the market found resistance. So again, it's an area of consistent trading decisions. Sometimes as resistance, you can see it there, and you can see it here. So sometimes it finds that area as resistance, and now it's finding that area as support, 106.70. So we know that's a distinct area of decision making: buying, selling, entering, exiting, support or resistance. So that becomes, again, our area to make our intraday trading decision. As people that don't have control over the market, what we're looking for is price action that implies one of two things: either a hold here and a bounce again back up towards the orange zone, which is what happened here when it got above the pink zone, it went to the orange zone, or it breaks underneath and goes back down to the yellow zone. So we need some price action. It tells us that one of those two things are going to happen. A quick spike into the pink zone and then rapid reversal would let us know it's going to go to the orange zone, or a breakout underneath the pink zone would let us know it's going to go to the yellow zone. So the pink zone's our major area of decision today, but I definitely think as long as it's on top of it, this is not your best opportunity to go short, but may present an opportunity to go long as long as it stays above 106.40.60 or 106.40.70 today for the US yen.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.